Zillow is one of the stocks that I have called a 10x opportunity for investors, and that's really starting to play out after third quarter results were announced. The results themselves were not necessarily all that impressive, not a ton of growth on the revenue side, 12% growth in residential, 17% growth overall. But what's more important is that this is becoming more and more of a platform business. And in the future, what we want to see is that Zillow is the place that you go if you're looking for anything housing related. You're looking to look at homes, even if you're just looking at what maybe your neighbor's home value is, but it's also where you go look to buy homes, where you look for a mortgage, where you look to rent a home or an apartment. If everything housing related is on Zillow, the opportunity for the company is much, much bigger than we see the market cap and the profitability revenue of the company today. And that growth trajectory is just starting to begin. So I think what the market is reacting to is that Zillow is growing in the right places. So I'm going to dig into exactly what I mean in this video. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go through the quarter and show exactly what I mean by phenomenal growth in the right places. So it's that context of doing more with Zillow that we need to read these results, because you can see here 17% increase in revenue. That's really nice. That's a really good number, growing faster than the housing market overall. But now just $581 million. The company's still not profitable. You may not see much of a positive reaction if you just looked at these top line numbers and what the bottom line looked like. But residential revenue was up 12% from a year ago. And that's because of conversion improvements as more buyers and sellers transacted with Zillow agent partners. So if Zillow is making it easier for their partners on the agent side to sell homes, making it easier to buy homes, that becomes a preferred place to list your home. It becomes a preferred place for agents. That's a really good sign for the residential side. I think they're making progress there, but these next two are much more important to me in showing signs that this is a platform company. Rentals revenue increased 24% year over year to $123 million. It's not out of the realm of possibility that over the next couple of years, rentals becomes a bigger business for Zillow than the residential business. I don't hope that happens, but that's how big this rentals business is becoming. Mortgages, Zillow is not selling mortgages themselves. They are not a bank, but they are becoming basically a lead generator for third parties. I think this is a playbook that they're going to put into a whole bunch of different things as they build this housing super app. So they want to be the place that you're doing all of your closing documentation, but they're not going to be a moving company. They're not going to be an insurance company. But why not find those services on Zillow? Those are the kinds of things I think that we're going to see growth in over the next decade or two. But mortgage revenue grew 63% from a year ago to $39 million, increase of 80% in purchase loan origination volume. On top of that, there was still $2.2 billion in cash on the balance sheet. Zillow is paying down debt at the same time, and there's market cap of about $15 billion. So still really good balance sheet and now free cash flow positive as well. From an outlook perspective, we are going into a little bit slower season for Zillow. Total revenue expected to go from $581 to $525 to $540 million, but expecting solid adjusted EBITDA at $90 to $105 million. And this implies a 12% growth in revenue at the midpoint of this outlook range. Rentals, again, the one I'm focused on here, is also expected to grow in the mid 20% range. So residential, the core business that Zillow has been built on, that's not going to grow all that much because housing transactions aren't going to be all that strong. That's because interest rates are higher. People like myself who have a 2-point-something% mortgage aren't going to be selling their home when they would have to replace that with a mortgage rate that's double that or maybe more. But rentals is still a growth driver for the company, and mortgages expecting to continue this growth, mid 60% growth rate. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, I'm a little bit surprised at the market's reaction here. Shares are up 25% as I'm recording in trading on Thursday. I didn't think the numbers actually indicated that the business was really turning around that much. This is really just a lot of the same story for Zillow. They're slowly and but surely making progress, growing that rentals business, growing the mortgage business, and they continue to make progress in building out their platform. But I think what we need to think about long term is if they are successful building out the platform and becoming that platform company where you have home seekers, people who are looking for rentals as well, is there more and more services that you can provide them and things that you can do on the technology platform? This is something they've been building for years. This is not a new strategy. We're just moving closer and closer to the point where you can do all of these things on Zillow. Now, the other thing that's out of management's control is interest rates and the trajectory of the housing market. So over the past couple of years, higher interest rates have been a headwind to the housing market. Over the past week, there's been at least a little bit more optimism after the election that the economy would get a little bit hotter. I don't know if we'll see that come to fruition, but definitely something that investors are at least thinking about. And then today, the Federal Reserve did announce that they were going to cut interest rates again. That has not manifested in lower rates on the longer term. So 10-year rates is really what you want to look at. Those are actually on the rise over the past month or so. So a little bit of an interesting reaction from the market. But obviously, we are seeing progress in Zillow becoming the platform company that I think it can be. That's where there's the biggest opportunity to disrupt the housing market as we know today. And I think that opportunity is only getting bigger. So love what I'm seeing from the company. I just wanted to show a couple of charts here to end things. The first is the company's segment revenue. And this is, you can see residential, mortgage, rentals, and other services. This is since September 2022, and this is quarterly numbers. So you can see that things are moving in the right direction despite the fact that the housing market has been relatively slow. And if we pull out just the rentals business, this is where there is consistent growth. So if this continues to grow at a 25% compound annual growth rate, that would be positive news for the company. The other thing is that CoStar, which is going to be the biggest competitor to Zillow, they own apartments.com, homes.com. Their business isn't growing quite as quickly. So if we still see Zillow gaining market share, that's going to be a good sign that these platform wars that I think these two companies are specifically engaging in, they want to be the winner and the place that people go to and service providers go to. They both have pretty similar strategies in a lot of different ways. The biggest thing is that Zillow is just under one name. CoStar has all these other names that are involved in their business, but they're growing. They're just not growing as quickly as Zillow is in some of these markets. So is that a sign that they are winning and building a better platform, something that customers go to more and more? We'll see if that trajectory continues, but that's another thing that investors are obviously digesting from the quarter. But let me know what you think about the quarter from Zillow and the market's reaction. Like I said, I think it was pretty surprising. Shares were up 25% today, but as a shareholder in a company that I'm invested in the asymmetric portfolio, definitely something that I'm happy to see happen. Probably be adding this more if we continue to see positive results over the next few quarters. But let me know what your comments are in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.